On Friday night, 150 American aircraft took off from 20 different air bases across the Western Hemisphere. 2 hours later, special forces landed at a compound in Caracas, Venezuela. 4 hours after that, the president of a sovereign nation was sitting blindfolded on a Navy aircraft carrier, heading to federal prison in Brooklyn. The operation cost, well, nobody's saying yet. But consider this. Venezuela has 303 billion barrels of oil, the world's largest proven reserves. 17% of everything under the ground globally, and they're pumping less than 1 million barrels a day. My 10-year-old could probably organize a lemonade stand that's more efficient relative to its potential. So here's the question. What exactly does America get from all this? Because if you asked me 2 weeks ago, I would have told you the last thing the United States government needs right now is another nation-building project. We're not great at those. And yet here we are, apparently running Venezuela for the time being, according to the president himself. The stated plan? American oil companies will spend billions fixing Venezuelan infrastructure, will get the oil flowing, everybody wins. Except, when they asked those same oil companies in December if they wanted to go back to Venezuela, every single one said no thanks. I'm going to explain how we got here, why the math doesn't work the way you think it does, and what's actually happening beneath the surface. Because this isn't really about oil, or at least not in the way you'd expect. Let me tell you about a poker player I knew. Smart guy. He'd calculated his odds perfectly on every hand, knew the game theory backwards and forwards. One night, he went all in on a hand he had an 87% chance of winning. He lost. Cost him everything. I asked him later what happened. He said, "I played it perfectly, just got unlucky." Here's what he was missing. Playing a hand perfectly and winning a hand perfectly are two entirely different games. One's about probability, the other's about outcome. And sometimes you can do everything right and still end up broke. That's Venezuela. At least that's the story being told. Start with the oil. Venezuela's reserves sit primarily in something called the Orinoco Belt. It's heavy, sour crude, thick as molasses, high in sulfur. You can't just stick a pump in the ground and fill up tankers. You need specialized equipment. You need upgrading facilities. You need technical expertise. Back in the 90s, American companies had all three. Then, in 1976, President Carlos Andrés Pérez nationalized the industry, created a company called PDVSA. Now, this wasn't quite the theft some people are calling it today. The American companies were compensated, about $1 billion total, for assets they'd invested over $5 billion in. So yeah, they took a massive haircut, but international arbitration courts said it was legal. Venezuela owns what's under Venezuelan soil. That's international law. Fast forward to Hugo Chavez. Takes office in 1999. By 2007, he's nationalizing again. This time, ExxonMobil and ConocoPhillips said, "No thank you, we're not accepting your terms." So Chavez seized their assets outright. Years of legal battles followed. Arbitration panels awarded ExxonMobil $1.6 billion. ConocoPhillips got $8.7 billion. Venezuela hasn't paid a dime. Can't pay, technically, because of US sanctions. See how this works? We sanctioned them for not paying us compensation for assets. We sanctioned them for nationalizing. It's a beautiful little loop. Under Chavez and then Maduro, production collapsed. They went from pumping 3.5 million barrels a day in the late 90s to somewhere between 800,000 and 1 million barrels today. For context, the US produces about 13.8 million barrels daily. Saudi Arabia does 10 to 12 million. Russia does 9.4 million. Venezuela, with the world's largest reserves, produces less than 1% of global supply. Why? Mismanagement? Yes. Corruption? Absolutely. But also, they lost the expertise. The American and European companies didn't just bring equipment, they brought knowledge. How to extract heavy crude, how to maintain upgrading facilities, how to operate a complex supply chain. When those companies left, that knowledge walked out the door with them. PDVSA tried to run it themselves, filled positions based on political loyalty rather than competence. The entire operation became a jobs program. By 2015, they had 146,000 employees doing the work that 60,000 did in 2000 and producing less oil. Here's where it gets interesting. Trump says American companies will now spend billions rebuilding Venezuelan infrastructure. The oil companies will be reimbursed for what they're doing. How? Presumably from Venezuelan oil revenue. But there's a problem. The companies already said no. Why would ExxonMobil or ConocoPhillips invest billions in a country that still owes them billions from last time? Why would Chevron, the only American company still there, suddenly want partners in a market they currently have to themselves? Why would any corporation put money into infrastructure that could be nationalized, again, the moment political winds shift? Unless, picture this, you're running a major oil company. Venezuela owes you $8.7 billion. You can't collect because of sanctions and Venezuelan bankruptcy. But now, suddenly, there's a new government, or at least a new temporary government. And the United States is running things for the time being. Here's what nobody's saying out loud. Those arbitration awards, they're senior claims, meaning they get paid first, before Venezuelan debt holders, before Chinese loans, before Russian oil for guns deals. If you can engineer a situation where you're not investing new money, but rather converting your old claims into equity stakes, you just turned uncollectible debt into productive assets. While the US taxpayer foots the bill for security, stabilization, and rebuilding the stuff that actually costs money but doesn't generate returns for years. There's a technical term for this in finance. It's called a credit to equity swap. There's another term for it in plain language. It's called getting whole on somebody else's dime. Now, you might think, but Tom, wouldn't that be, I don't know, kind of cynical to use military force to essentially bail out oil companies' bad loans? To which I'd say, you're absolutely right. Let me tell you another story. Back in 2003, a think tank in Washington published internal documents showing that before the Iraq invasion, energy companies had already been meeting with officials to divide up Iraqi oil contracts. The administration insisted the war wasn't about oil. It was about weapons of mass destruction. Then it turned out there weren't any weapons, but there sure were a lot of oil contracts. I'm not saying history repeats, but it definitely rhymes, like a really lazy poet. Let's look at the actual numbers on Venezuela's oil potential, because this is where the narrative completely falls apart. Even if American companies did invest, even if they rebuilt everything perfectly, it would take at least a decade. Analysts say more than $100 billion in investment just to get production back to 4 million barrels per day. That's above Venezuela's historical peak, by the way. In oil prices, currently around $57 per barrel. The market is oversupplied. Nobody needs more oil right now. Russia's pumping. Saudi Arabia is pumping. American shale is pumping. Adding Venezuelan heavy crude to an already saturated market would probably drive prices down further. Most US refineries were built to process Venezuelan heavy crude. They're actually more efficient when they use it instead of American light sweet crude. So Venezuelan oil helps American refiners, but it competes with American oil producers. Who has more political power in Washington? Refiners or producers? Producers by miles. They're in Texas, Oklahoma, North Dakota. Refiners are spread out along the Gulf Coast. The producers have absolutely no interest in seeing Venezuelan oil come back to market in serious volume, unless the producers themselves get the contracts. Which brings us back to the claims conversion. At this point in my research, I had to stop and make myself coffee because I realized something. The operational details of this thing make no sense. But the financial engineering, that's elegant, almost beautiful, in a sociopathic kind of way. Let me break down what actually happens if this plays out the way I think it's going to. Step 1, American forces stabilize Venezuela. We're already doing this. Cost unknown, but definitely not cheap, paid for by US taxpayers. Step 2, American oil companies convert their arbitration claims into equity stakes in Venezuelan oil projects. They're not investing new money. They're just changing the form of money they're already owed. Cost, zero, technically, since it's just an accounting entry. Value, billions. Step 3. The Venezuelan people celebrate getting rid of Maduro. They should. He was genuinely terrible. But they now owe foreign companies even more money than before, because those equity stakes come with guarantees and returns. Step 4. Venezuelan oil eventually starts flowing again. Revenue goes to pay back the companies first, Chinese and Russian creditors second, reconstruction third. The Venezuelan people see money. Eventually. Maybe. If there's anything left. Step 5. American taxpayers pay for security, infrastructure, democracy building, all the expensive stuff that doesn't generate profits. The companies extract the profits. Standard operating procedure. See Iraq, see Afghanistan. See every resource extraction operation in a destabilized country since the Romans figured out how to do it with grain. This is the part where you're supposed to ask, but isn't there a good case for removing Maduro? The guy was genuinely authoritarian. The election was genuinely rigged. He was genuinely presiding over economic collapse and humanitarian disaster. Yes, all true. And that's what makes this so insidious. Because you can have multiple things be true simultaneously. Maduro can be a dictator who deserves to face justice. The Venezuelan people can deserve free elections. And powerful interests can simultaneously be engineering the entire situation to convert bad debt into good assets. The human brain hates this. We want clean narratives, good guys and bad guys. But reality is messier. The same military operation can liberate people and enrich oil companies. These aren't contradictory. They're just two different lenses on the same event. I spent 10 years running my own business, sat in rooms with lawyers and accountants who could find tax advantages in hurricanes. What I learned? Follow the incentives, not the rhetoric. Not the stated intentions, the incentives. Who benefits if Venezuela becomes an oil-producing client state? American oil companies with existing claims. American refineries that need heavy crude. Defense contractors who get paid for stabilization operations. Financial firms that structure these deals. Who pays? American taxpayers, Venezuelan people. And everyone who believed this was primarily about democracy or drug trafficking. Those might be real concerns. They're just not the primary drivers. The primary driver is always the same. It's money. Specifically, how to get it from public ledgers into private accounts without anybody noticing the sleight of hand. Now here's where it gets really interesting. And by interesting, I mean darkly hilarious. China and Russia have massive stakes in Venezuela. China's given them tens of billions in loans, all backed by future oil deliveries. Russia's got military contracts, oil partnerships, all sorts of arrangements. They just approved 15-year extensions on joint ventures with Russian companies in November. So the US just captured the president of a country where China and Russia have invested hundreds of billions of dollars. We're now running that country. And we're telling Chinese and Russian companies, sorry, those contracts might not be valid under the new management. This is how you start a different kind of war. Not hot war, necessarily, but economic warfare that makes the trade wars of 2018 look like a middle school argument about lunch money. China's already called this deeply shocking. Russia called it armed aggression. Neither of them is going to just write off their investments. They'll fight this in international courts, through proxies, through economic retaliation. Venezuela might be nominally under American control, but it's going to be contested space for years. And that infrastructure we're supposedly rebuilding, the upgrading facilities, the pipelines, the ports, every dollar we spend makes us more committed. It's the sunk cost fallacy on a geopolitical scale. We'll be there for years, spending billions, because walking away would mean admitting those billions were wasted. Iraq cost us over $2 trillion. Afghanistan cost us over $2 trillion. Venezuela has more oil than Iraq ever did. Do the math. But you might say, Tom, you're being too cynical. Maybe American companies genuinely will invest. Maybe this will help Venezuela. Let me tell you about Citgo. It's a Venezuelan-owned oil company with refineries in the United States, worth about $10 billion. Venezuela defaulted on debt. Creditors, including those oil companies with arbitration awards, are trying to seize Citgo to pay those claims. The Venezuelan opposition that the US recognizes appointed a board to try to protect Citgo from seizure. That board has been fighting in US courts. If this regime change succeeds, Citgo gets seized to pay old claims. Venezuela's single most valuable foreign asset? Gone. To pay debts incurred under a government we just removed. You see how this works? The debt follows the country. The assets get liquidated to pay foreign creditors. The people get austerity. The companies get paid, tale as old as time. I've got hundreds of thousands of dollars invested in various markets. I've watched this game play out in Greece, in Argentina, in Russia after the Soviet collapse. The pattern is always the same. Crisis, foreign intervention, debt restructuring that somehow benefits the interveners, asset sales to pay creditors, austerity for the population. And 20 years later, economists write papers about failed structural adjustment. Venezuela is going to be a case study in business schools in 2030. Resource wealth and political incentives. Why the curse persists. Some professor will explain how despite massive oil reserves, Venezuela remained poor because of corruption, mismanagement, and foreign exploitation. Students will nod. Nobody will mention that we watched it happen in real time and did nothing, because the people explaining it are the same people profiting from it. So what does America actually get from Maduro's capture? Short term, a foreign policy win. Tough on dictators. Tough on drugs. Helping the Venezuelan people. Great for approval ratings. Medium term, a massive financial and military commitment. Billions in costs. Years of occupation or stabilization. Contested by China and Russia. Domestic political fights over every dollar spent. Long term, if everything goes perfectly, maybe Venezuelan oil starts flowing again in sufficient quantities to justify the investment. But perfect is not how these things usually go. Meanwhile, certain companies convert uncollectible debt into productive assets. Certain contractors get paid for stabilization work. Certain politicians get campaign contributions from grateful energy sector donors. And the Venezuelan people, they get a chance at democracy, which is valuable. They also get new debt obligations, new foreign claims on their resources, and a new set of people telling them how to run their country. Is that better than Maduro? Probably, but it's not exactly liberation. It's more like trading one set of constraints for another. Here's your 3 takeaways. 1. When someone tells you a military operation is about democracy or drugs or justice, check who benefits financially, not who might benefit, who definitely mathematically benefits. Follow the money before you follow the rhetoric. 2. Resource wealth is usually a curse, not a blessing, because the fight to control it creates perverse incentives. If Venezuela had no oil, Maduro might have fallen years ago through internal pressure, and the transition might have been messy but genuine. With oil, every foreign power has an incentive to shape the outcome. The Venezuelan people get less agency, not more. 3. The most expensive wars are the ones we fund without calling them wars. Stabilization, peacekeeping, reconstruction, democracy building, these all cost real money from your taxes. But they're not in the defense budget. They're in foreign aid, State Department funding, various agencies. Added up over decades, and it dwarfs the initial military operation. But nobody tracks it as cost of the Venezuela intervention. Lazy investing built more fortunes than crypto memes. You know what's lazier than crypto? Letting the government spend trillions stabilizing countries, so your existing bad debts turn into good equity stakes. Doesn't require tweets, doesn't require meme pages, just requires being in the right rooms when decisions get made. The next time somebody tells you a war isn't about resources, ask them whose resources. Because even if it's not about taking resources, it might be about who gets to collect debts backed by those resources. That's a distinction without much practical difference. Venezuela is not unique. It's just more obvious. Same game that's been played in resource-rich countries for a century. The only thing that's changed is the public relations got more sophisticated. We stopped calling it imperialism, started calling it liberation. Outcomes roughly the same. 303 billion barrels of oil, less than 1 million barrels a day in production. And everybody from Washington to Beijing trying to figure out how to profit from the difference. The Venezuelan people are in there somewhere, between the oil and the profits. History suggests they'll get the worst of both.